Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 28th, 2025, and we're diving into the second quarter earnings report of Enterprise Products Partners, a leading North American provider of midstream energy services. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Enterprise Products Partners has just released their Q2 2025 earnings, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the financial highlights. Enterprise reported a net income of $1.4 billion for Q2 2025, with an adjusted EPS of 0.66, slightly above the forecasted 65. John, what does this tell us about their profitability?
Enterprise has shown a solid performance with a 3% increase in net income per common unit compared to last year. Their distributable cash flow also rose by 7% to $1.9 billion, which provided a comfortable 1.6 times coverage of their increased distribution of $5.45 per unit. This indicates strong cash generation and a commitment to returning value to unit holders.
Operational efficiencies and future outlook. Enterprise's operational cash flow remained steady at $2.1 billion, and they invested $1.3 billion in capital projects. How does this position them for future growth?
Enterprise is strategically investing in growth capital projects, with $6 billion expected to enter commercial service in the second half of 2025. Their liquidity of $5.1 billion ensures they can fund these projects without financial strain. This positions them well to capitalize on future opportunities, particularly in expanding their natural gas processing infrastructure.
Segment performance and market dynamics. John, can you break down the performance across Enterprise's segments?
Sure. The NGL Pipelines and Services segment maintained a strong margin of $1.3 billion, while the Crude Oil Pipelines and Services saw a slight decline to $403 million. Notably, the Natural Gas Pipelines and Services segment increased its margin significantly to $417 million, driven by record pipeline volumes. The Petrochemical and Refined Products Services segment, however, experienced a decrease to $354 million due to lower sales margins.
CEO insights and strategic initiatives. Enterprise's CEO, Jim Teague, mentioned several strategic initiatives. What are the key takeaways from his statements?
Jim Teague highlighted record volumes in natural gas and crude oil, driven by their assets in the Permian and Haynesville basins. The commissioning of new facilities like Mentone West 1 and Orion enhances their processing capacity significantly. Additionally, the Neches River Terminal's new ethane refrigeration train reflects their ability to meet growing global demand for U.S. hydrocarbons.
Key takeaways. In summary, Enterprise Products Partners delivered a robust performance in Q2 2025, with strong earnings and strategic investments positioning them well for future growth. Key takeaways include a net income of $1.4 billion, an adjusted EPS of 0.66, and $6 billion in growth projects slated for the second half of the year. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Enterprise's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Enterprise's performance in the comments below.